Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday, it's June 13th. This will be our chart lesson for the day. And I apologize. I just now, 5 minutes ago, realized that there was no midday chart today. I actually did the midday chart, but for some reason I never hit the send button and it never uploaded. So I apologize. My head is still in the clouds, obviously. I can't get a whole lot done. I couldn't hardly trade again today because the phone rang every 10 minutes. But it'll take me a couple of days to get back in the swing of things here. So, again, you'll probably get a notice here shortly about the chart. I went ahead and uploaded it since it was already done, but it's a little too late. But anyway, just wanted to explain that real quickly if you were looking for it today and couldn't find it. But nice trend today. This is almost perfect price action. What you would expect on when you see a nice trend going up, and then notice the difference in the color here. This is where we move the blue or light gray or whatever you want to call it is the overnight um, section, and the white is where we open at the regular session at 8:30 or whatever. So uh, notice how we continued trending up into the 8:30 session. That's usually a good indication that you may have a trend day. Doesn't mean that you will, but that generally is what happens. But not long after, at some point, you will generally get a correction. Um, and we got that. This is really a two-legged correction. There's one leg down, a little correction, another leg down. It doesn't look that way because it's a lot. There's a lot of sideways action here, but this is a two-legged correction. And then once that correction is over, you would look for another leg up. And if you measure this first leg, you can see I measure that. Here's your next leg up, and I mean it's a perfect measured move. And that's generally what will happen. You'll get this correction, and sometimes if the market's really strong, it won't do anything but go sideways for a little bit. But most cases, you're going to come back about 50%, and half of what the original move was in the morning, and then you'll find support and you'll move on and make another high. And so that's real common. Let's look at this leg as well. And you would have measured that one and look from here, and you can see we didn't quite. We ended up getting that measured leg, but it didn't come till much later. We didn't quite make it here, so that would have been my target. But notice what happens first is we get a close outside that trend line and a move to a new high, and then we got the two-legged correction, and then we went on. And somebody contacted me. I think they went long right in here and all this congestion and stuff. I think they went long right here on a second entry. There's no setup on my chart, but notice that you've got a nice green bar here, but it never broke above. You can't go long right there. I can't remember what his chart looked like, but he couldn't understand what he did wrong here. Well, first of all, you've already had your close and a move to a new high. Sometimes you get two legs, but you probably wouldn't have had that big a correction if you were going to get another leg up on a two-legged correction. But there's no setup here on my chart. I can't remember exactly what his looked like, but the main thing this trader missed was he missed the break. He actually drew his trend line from here, like so. And so this looks like the first break to him. Well, you always start from the low, and there's your first two swings. So you're not drawing your trend line correctly there. Your channel is as I have it drawn here. So that's your first mistake. But anyway, that explains kind of how the day set up, and this is very obvious, standard, perfect, what I call perfect price action. So, um, but let's talk about the trades. First trade I saw was this second entry right here. Notice we're moving up. We get a pullback, first entry. We pull back. Actually, the second entry is right here, but we get back to where you would expect the trend line to be right here. And you actually went lower first and then turned up. And there's actually a trend line right here too. Um, and you get a little bit of a close outside. It's kind of questionable, but then you make a new low. And let me make this a little bigger. But notice you got this, there's basically a double bottom there, right across there. And you get this little failed break lower. It goes lower first and turns, it goes right out the other side. I like going long right there. You could wait on this bar. Uh, if you'd waited on this bar though, notice it closed with a little bit of a stem up here. So if I wasn't already in when it broke higher above this bar, and this is one of those rare instances where you do that only because it went lower first and then reverses instantly right at a spot you would expect to be a trap and a reversal area. So there's plenty of room to get out before the highs, so I like entering there. But if you waited on this bar, it's a little more suspect. I would probably want to let it break higher and drop me a limit order back a tick or so. And I don't know if you would have got filled on that, so it would be questionable. But then we move up, and we just kind of start going sideways in this little range. The reason I like this entry here, you actually would have entered, if it hadn't been for this bar, I wouldn't even like this entry. But this is really the entry trigger, but you have to go, your stop has to go below the low of the lowest swing. So that's really your signal bar in this case. So, but notice you have a new low here. You're moving up. You try to go lower once. You try to go lower twice. You get a double test here of this level, and it's right off the EMA. That's the first break of your trend line. It is right into the high, so that makes it, I mean, this is borderline. I could make this green just as easily as I like it blue, but we were looking for that measured move, and so I was looking for another leg up here. I figured there would be two legs in this to a measured move that was way up here, and so I felt it was worth risking because we've been trending up the whole time. But really, this is so borderline, you could call it green. So anyway, you get your break here, a new high, and then you're coming down, and you don't really get any support there at the EMA. That's a bit of a sign. Um, you want it to bounce off the EMA here. When it pushes right through, that's not a good sign. And you would expect it to get some support right here because you can, I mean, there's been support all the way across there. So I would expect some support there. Notice it continues to hold there, and we're just going sideways. You continue to stay within this. And before I move on to this next trade, this is another thing too. Notice what this is. This is what you call a classic head and shoulders pattern. And what do they teach you on a classic head and shoulders pattern? That's a reversal pattern. The prices are going to reverse. And all it does is it moved lower just enough to probably trick all those people that follow that kind of trading, that are pattern traders, into getting short here. And look at them loading up. Look how it's picking up steam here. And suddenly it reverses, and they all lose money. They all have to exit, and they end up losing money. I don't even want to get started on that, but I just noticed that, and that was a good example of. I don't talk about that kind of stuff much, but most everything you read and learn about in trading, especially when it comes to patterns and all these rules, and most of that stuff's gibberish. So it's just my personal opinion. Somebody may disagree, but I've been doing this a long, long time, and I learned the hard way because I used to read and try to trade all that stuff, and all I did was lose money. So it wasn't until I learned to read a chart and understand how prices really work before I started making any money. But again, that's just my personal opinion. So, but anyway, you move down. We're going sideways. The first opportunity you got to enter here, there's several good. Like that's a good bar right there, right at the low, but look where the highs are. You don't have any room there. So you really need that failed break lower. And I talk about this a lot. A lot of times I really was hoping this would be the low and we'd make that next leg up, a measured leg. And a lot of times you will. So these are key entry points. And so I like that one. It didn't turn out to be the low, but it did still give me a nice easy scalp there. And really in the end, you couldn't really see it at that point, but really there's one leg down right there. Oops, grabbed the wrong one. And then there's your next leg down, and it went a little further than a measured move there, you can see. But there's two legs there. And you might even just measure this leg and then the correction. Um, that's the way I would have measured it the first way. There's your first leg, and then there's a two-legged correction. And I would have measured this. So I would have been looking for a target right in there first go round. But anyway, I like this long. It didn't turn out to be one of the good ones, but it still was an easy trade, and it still followed the rules that you get a failed break lower. And I guarantee you there's people loading up short here, and they have to exit, and it bumps it back up again until it gets right into the resistance where they've been selling, and they all load up and sell again. It's tempting to go short here, but there's not very much room here, and you need to wait on a lower high. And notice what happens. It pushes right through the EMA again. It doesn't even get any resistance here. It pushes right on through. It pulls back. It tests it, and it gives you a bearish bar. I'd look for a second leg down there. You measure that first leg here. There's your start of your second. So that's my target right there. You got plenty of room. So I like going short there. Just looking for that second leg down. And it could turn out to be a range day, and you may catch a major high. But just looking at it early this morning, immediately I suspected that hey, we'll probably get a little 50% correction here, and then we'll make our next leg up, and that's exactly what happened. So, and when you watch this stuff every day, you'll start to recognize these things, and it's not easy. It takes a long time, but when you sit here for 8 hours a day, day after day, year after year, you start to see this stuff. And so it doesn't take that long to learn to see it. You do continue to get better at it as the more you watch it. I mean, I used to think that you couldn't get any better at this, but I still get better. I still learn stuff every day. So, but anyway, we make that new low here. This one is another one that's really tempting to go long right here. And I probably should have at least marked it green because I like these trades. Especially when you were overdone on a second leg down there, you're going to snap back and at least come back to that EMA. But notice what happens. You got a low, you get a first entry short, you move up, you get a failed second entry short, you push right through the EMA. You get a little resistance there, but you push on through, you get that failed second entry short. There's your reversal pattern. We're probably headed higher now. That's the sure thing that you want to jump in on. And notice how generally this will take off. It didn't in this case, but you had to trust it and hang in there. And if you did, you were rewarded. Look what happened when it finally broke above. All those shorts, that's where they all started exiting. There's probably a bunch of them piling up here too. And that's why you get that huge bar that jumps up like that, because they all have to exit. And that's generally when you see a big move like that, or a big bullish bar or a big bearish bar, that's a sure sign that, yeah, there was a trap there, and because people are exiting, and so the volume picks up real quick. I mean, that's a beautiful bullish bar. I really thought we were going to take on off fairly quickly there, but again, we find resistance right up here where we've been finding it, and they try to sell it off. But notice what happens. You got your trend line off these first couple of swings. You drag it up, it fits up here so far, and you come back down here, you get a break, you try to go lower twice, and you get a nice bullish bar in your third touch and confirmation of that trend line. Again, you have to go long right into the highs, so that should worry you a little bit. You need to be concerned about that. So again, this one's borderline being green. But I like it because it's the third confirmation, and we tried to go lower multiple times there, and that's a nice bullish bar. It shows some buying came in, and you might have let it break higher and dropped it right at that high. If you tried to get a tick back, you probably wouldn't have got filled. So the best you would have done right there, and that's what I tell people. It's, sometimes it's safer to try to get in where you're guaranteed you can get out before the high. But on a good trend day, you're going to miss the best trades that way. You know, when it's trending and strongly, um, sometimes you're not going to get any options. So this one again is borderline. It could be green just as easily as it's blue. It's right there at the borderline. Um, I'm gonna leave it blue today just because because of the reasons I talked about. You got not only the trend line, the confirmation of the trend line, you also got the confluence of the EMA coming in there. You tried to go lower once, twice, three times. This was really a failed second entry short right there. So you could have argued to go long right there on the failed second entry short because you got a new low, swing low right there. Because that's basically a swing. It didn't tick lower, but it's still a swing lower. But sorry, I had a slight interruption there. But yeah, anyway, I like that entry. And we moved higher. Then we back up. We get our first break here, and it looks like we're going to sell off again. And this is really a double bottom. There's a low here, and then you test it once, and then you test it again right here, and you hold, but it does break lower. So you can treat this like a failed break lower. I'm not crazy about this trade this late in the day because we could have easily reversed at this point. We don't quite have a measured move, but we didn't get one this morning either when we were looking for a measured move. So you may not get a measured move. Turns out we do in the end, almost a perfect one, but you don't know that ahead of time. And the way that pushed right through the EMA, it looks like it's going to reverse. So this one's a little risky. There's still reasons to want to like it to the long side. It's the first price of a break of this trend line here, this trend channel, and it's been an up day for the most part. It's a trend day, and so you expect that it's also a repeat pattern of this right here. I mean, it's almost a perfect repeat pattern. Notice that you got a first entry, second entry, and then you drop down right here. You got to pull back first entry, pull back second entry, then you drop down and you go higher. So it's kind of a repeat pattern as well. That's another reason I like it. We'll talk about that a lot. When you see a pattern that happens over and over, if it works the first time, it's probably going to work the second time. And notice this is very similar here as well. There's the pattern again. You make a new high, first entry, second entry, fails, comes back, and then drops down, then that third entry goes. So that it's almost that repeat pattern again. So anyway, that was what I saw for the day. I apologize that I'm late getting this up here. It's 8 o'clock here, so I'm late getting this up. I'm going to upload it here shortly. I was late getting or I basically didn't post the midday chart either. So like I said, my head's still in the clouds a little bit, and I have a lot of distractions, and trying to trade today. I needed to come back and make some money. So I was trying to trade today. I need a payday. But anyway, I'm going to wrap it up for the day. We'll be back again to do it tomorrow, and hopefully I'll be a little bit more on the ball tomorrow. But I'm out here for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.